Hey everyone, welcome back to Corporate Decoder. Today we are diving into a financial filing that's a bit like a roller coaster. You think it's over, but it keeps going up and down and looping you with more twists than expected. Get ready as we unravel Aditxt's latest amendment regarding its merger plans. Aditxt Inc. has filed an amendment to their previous reports about a merger. Basically, this filing updates us on the financial side of things, particularly concerning their planned merger with Evofem Biosciences. They're adding in Evofem's latest audited financial statements to give everyone a clear picture of what's going on. Back in December of 2023, Aditxt announced a merger plan with Evofem Biosciences through a subsidiary. Since then, there have been several updates and changes to the agreement. They keep amending, which means they keep changing. The merger agreement. This amendment includes updated financial information about Evofem, which is crucial for investors to understand the deal's potential impact. There were so many amendments to the merger agreement that at one point they amended the amended agreement. Recently, there was a fifth amendment to their agreement. Basically, Evofem needs to set a shareholders meeting and the company has to make a OFEM. The final date to finish the merger has been pushed to September 30, 2025. It seems like they're committed to seeing this deal through even with the delays. Now, this specific amendment we are talking about focuses on including Evofem's audited financial statements for the past couple of years. It also adds something called pro forma financial information, which is a what-if scenario showing how the combined company might look financially after the merger. Let's dive into those financial statements. We will begin with the balance sheets of Evofem. Looking at Evofem's balance sheet as of the end of December, their accounts receivable, which is the money owed to them, was about $2.7 million in 2024, down from $4.6 million the previous year. This could suggest they were having a harder time collecting payments or their sales mix changed. Their total current liabilities, the debts due within a year, are alarmingly high, standing at roughly $148.9 million in 2024. That's a slight decrease from about Win53, but still a huge number. This is a big red flag, meaning they have a lot of short-term debt. The convertible and redeemable preferred stock is listed around $281.8 million in 2024, decreasing from $295 million in 2023. This type of stock is a hybrid and can convert into common stock under certain conditions or be redeemed bought back by the company. Such amounts represent significant liabilities and ownership considerations that could materially impact the post-merger financial structure. Now, looking at Evofem's income statement, their operating expenses, the cost to run the business, are significantly higher than their revenue. In 2024, their operating expenses were over $71 million, and in 2023, they were over $90 million. Interest expense really hurts them. They spent nearly $60 million in 2024, down from about $74 million the previous year. This huge interest expense shows that Evofem has been relying heavily on borrowing, which eats into their profits. This level of debt is a major concern. Evofem is seeing huge losses. They had a net loss, the total loss after all revenues and expenses are counted, of about $130 million in 2024. And about $166 million in 2023. These are huge losses. Turning to the cash flow statement, they used about $62 million in operating activities during 2024. This means that their core business operations are consuming rather than generating cash, increasing the need for external financing. Finally, let's look at the pro forma information. Remember, this is what the combined company might look like. The filing includes a pro forma consolidated balance sheet as of December 31, 2024, and a pro forma consolidated statement of earnings for the year then ended, as if the acquisitions of Evofem and Apili Therapeutics Inc. had occurred on January 1, 2024. It's a hypothetical scenario. The combined pro forma total revenues is about $23.6 million. The combined net loss is about $162 million. Even if you combine the companies, the losses are staggering. So what's the takeaway here? Aditxt is trying to merge with Evofem, but Evofem's financials are really concerning. They have huge debts, massive losses, and they're burning through cash. The merger seems risky, but Aditxt might see something in Evofem that isn't obvious from these numbers alone, like potential future growth. If this merger goes through, Aditxt will need a solid plan to turn Evofem around, or at least manage its debts. Otherwise, Aditxt might be taking on more than it can handle. For Aditxt, the main risk is taking on Evofem's debt and losses, which could hurt Aditxt's own financial health. They also face the risk that the merger might not deliver the expected benefits, and they'll be stuck with a struggling asset. On the other hand, the merger could give Aditxt access to new markets or technologies, helping them grow faster. But given the numbers, that seems unlikely. In conclusion, this merger is a high-risk, high-reward situation. Aditxt is either making a bold move that could pay off big, or they're walking into a financial storm. Only time will tell. Thanks for tuning in to Corporate Decoder. Don't forget to like, comment, and subscribe for more financial deep dives.